So why don't we start by, I'm Matt Kaplan, Vice President of Brand Partnerships at Cheddar. If you don't know Cheddar, we are a financial news network that's focused on reaching millennials, sort of the intersection of business technology and culture. But more importantly, we're here to hear from Jay. Jay, why don't you take a moment to tell us about yourself, and let's talk a little bit about Manulife, because as we discussed yesterday, it's new to me.
Yeah, sure, absolutely. So I am part of Manulife Investment Management, which is the fourth segment within Manulife. So Manulife is a global brand. Many of those in the continental U.S. will know us as John Hancock, as the brand that we do business as in the U.S. And so in 2004, we merged Manulife with John Hancock in order to offer solutions globally, both insurance solutions, banking solutions, as well as wealth and asset management solutions. So the part of the business that I'm in is the wealth and asset management part of the business. And so what does that mean? Well, that means globally, so that's in Europe, Asia, Canada, and United States. We offer solutions for retail investors. So if you think about ETFs and mutual funds and other vehicles that folks use for investing and saving. We also offer retirement services. So if you think about your company's 401k plan in the US, we offer those services and products on those platforms. So when you sign up and you enroll, as well as what you invest in. And then we also offer solutions for institutions. So if you think about pension plans for, say, state of California may have a union that has a pension. So those are primarily liability-driven investing. And then part of our institutional business actually is also what we call private markets. And so if you think about public market investing, you think about the stock market or things that are publicly traded. And then private market investing is things like agriculture or forestry or things like that that are privately held, real estate and things like that. So we have products in those areas as well. And my role is head of digital experience. So I'm tasked with making sure that we're delivering world-class digital experiences to customers across the spectrum. And that means when they come to us, so that's when they come to our websites or mobile apps, as well as when we reach out to them over social media, over email, over search engines, and then all of the tracking that goes along with that. So making sure that we're getting the proper insights and analytics to both make a better user experience for our end users, but also give the intelligence to the business to make sure that we're providing the right the right products and services that the market wants.
Great. I think from a getting started perspective, let's talk a little bit about the industry, because obviously, like most industries, it's been disrupted by digital and it's going through major transformation. So can you talk a little bit about sort of the impact of all the trading tools that exist today, whether it's the Robinhood or Weebles of the world, and I mean, we could start there, but sort of going down to the, how sort of meme stocks and Reddit are impacting financial markets.
Sure. I mean, there's a ton to unpack there, right? I would say that, for many years now, decades, if you will, folks have talked about robo and different types of investment vehicles that are competing with the traditional asset manager, what we call the active asset manager, right? A human being, a person picking stocks and basically watching the market and making recommendations versus computers kind of running algorithms, right? And trying to do, a similar thing. I would say that most recently, though, what we've seen with, COVID is a big push into digital, obviously, both in terms of the way we service our customers and then the way that we go out and find new customers across the spectrum of the audiences that we serve. And then you bring up an interesting sort of new paradigm, which is a relatively new paradigm, which is, sort of this concept of, investors rallying together on social networks and things like that and sharing information about, where they want to invest and what they want to invest. And I think, there's quite a bit to unpack there. But I think that, primarily when we look at the services and the products that we're offering, we're essentially trying to it's still a very confusing marketplace out there, right? And it's always changing. There are tax ramifications. There are lots of different things that folks are doing in terms of putting together their portfolio for what they want to do for retirement. Could it be college savings? Could it be saving for a major purchase, et cetera? Could it be making sure that they're taking advantage of all the proper tax things that are available to them? And so, our products and services, are part of that entire sort of ecosystem, and we have a broad set of offerings given the size of the organization. I mean, $880 billion Canadian dollars assets under management is quite a lot of responsibility, and that's across our retail investing platforms, our retirement platforms, as well as our institutional investing platforms. But you make an interesting point when you start thinking about the way that new investors want to invest, right? And you start thinking about people talk about the GameSpot example or some of those other ones, and I think what we're seeing really is not necessarily something that is necessarily that new. I think we are seeing a trend among the younger investors that they're more outcome driven in their investing versus returns driven. I think what folks are looking at is they're saying, yeah, I want to make a return on my money, but not at all costs, right? That's not the ultimate end. I do want to use my funds and my investment to make the world a better place, to change the world that I'm living in. And I would say that the future for firms like ours and investment and financial services organizations is to shepherd that and to make sure that we're providing those types of solutions where folks can feel good about what they're investing in. There's been a major rise in what we call ESG investing as well, which many have heard about, which is, environmental, social, and governance. And that's, making sure that when funds are invested, they're invested in firms that are in line with your values as an investor, not just in line with returning you dollars, if you will.
Yeah, no, it's a great point, and certainly those opportunities are becoming more prevalent. Speak a little bit about the sort of technology piece and the way that you think about competing with as a traditional company that's moving into the digital world versus some of the native digital trading apps. How do you use sort of your legacy capabilities as a benefit as opposed to an anchor?
Yeah, well, I mean, I think it's rather interesting, right? Because today, when you look at the actual world of investing, it's not very de-intermediaried, right? So a majority and a vast majority of the investment trading that's going on today is still intermediary driven. That means it's through a financial advisor, through a platform, through that kind of mechanism, and that's that way for quite a bit of reasons. The complexities that we talked about, but then also the trust that's created in that, and then also the stability in the markets that creates as well. But we don't necessarily compete in the same way in the direct consumer market. So one of the things that we're looking to do is to put tools and put information into the hands of those intermediaries in order to help them make better decisions about their portfolios for their customers and to better educate those customers. Because we believe that a better educated investor is going to be happier with their investment portfolio. They're going to be more enrolled in it, and they're going to do better at achieving their goals. So if it's really hard for me to speak broadly because of the breadth of the offerings that we have. But if you think about the retail market, for instance, which is the mutual fund, the ETF business, et cetera, folks are taking a much more hands-on approach to their investing. right? Do they have the apps on their phones? They're looking at markets. They're hearing about this information. And what they want to understand is, how does their portfolio match up with what they're hearing and reading, first of all? What are the inherent risks? And how does that match up to the type of investor that they are, right? Not all of us are, cleaning out our savings account and going to invest in the next cryptocurrency, because we don't have that kind of tolerance for risk, right? Where others do. And so part of the job is to make sure that we put those tools in the hands of both the end consumer and in those that are intermediating and helping them and shepherding them along, in order to help make the proper decisions for those customers. And I think the same would hold true for the retirement services area. So even though 401k is really a really big thing in the United States, obviously, and if you asked most folks who hold only a 401k, if they're an investor, they would tell you, "Oh no, I don't invest in stock." Where, as a matter of fact, you are an investor. You do invest in stocks, and you do, have quite a bit at stake. And so, again, providing that information and making sure that folks understand, what it is that's going on with their dollars and their retirement dollars is vitally important. And when we do a good job of that, what we see is that the retirement plans do better, right? Because they have the types of products on the plan that people want. People are investing more because they see the value, they understand the value, and they're more prepared for the next stages of life. And so, there's quite a bit in there about getting out information and tools in people's hands and getting them excited about it, and so that they can, take more of a part in their investing.
And in addition to sort of the digital touch points, which we'll dive deep into in a moment, because that's your remit, there are still I assume there's still either asset managers or financial advisors who play a big role in what your firm does.
Absolutely, it can't be overstated. When you think about when folks go to a firm and they're going to an advisor and they're looking for that advice, the products and services that are both available on that advisor's platform, as well as the ones that they select, are carefully chosen, right? And so those get chosen based on their performance, what market need they meet, and where they fit into the overall portfolio that business wants to offer to its customers. And so, as a big part of our job is to make sure that we're meeting those needs. We're identifying where there's an advantage for us in the marketplace that we can meet. There's a need that we can meet, making sure that the message is very clear as to what that need is, and that it can be easily explained, and then that we can put that in front of folks at the right time on the right medium, so that we're there when those conversations are happening.
Got it. Now, sort of pivoting slightly, one of the things that's interesting about your role is you're responsible for the full funnel, if you will, digital touch point with prospects through, loyal customers. Can you talk a little bit about how you think about that, soup to nuts? And then I guess we could dive into some specific areas, but just first, big picture, how do you think about that consumer journey all the way from someone you've never interacted with as a marketer before to the people that have been with you for a decade?
Yeah, it's a great question. I mean, I think first and foremost, what we're looking for, is deep and lasting relationships. That's what we're looking for. And, more and more, we need to rely on digital mediums in order to create those. And I view that as, a healthy challenge, right? I think one of the largest problems specifically for the enterprise, so for the large, multinational enterprise, is ensuring that from one part of the business to another, or from one product to another, that you're having a consistency of experience, and that you're understanding that the customer journey is less like Monopoly and more like Chutes and Ladders, right? And folks are going to pop up in all sorts of different places. And the only way to really navigate that is through the first party data. And how are you capturing first party data? Well, that's a value for value trade, isn't it? Right? I'm asking you for your attention. In exchange for that attention, I want you to identify yourself. And when you identify yourself, and then we trade attention for product and service, whether it's paid for in an investment or whether it's free to use. And then through that exchange, we hopefully are providing you with the information necessary to make the right decisions. And when it comes time that we have a product in the running, we hope that you'll consider us. And then also that information we capture from you as a consumer is helping us inform, do we have the right products and services? Are we putting them forth in the right way that you can understand them and use them, as necessary? And I think, that is blurring that line between a customer, a prospect, is very important to our organization. I think it's important for all marketers and businesses moving forward. Ultimately, the old paradigm was, here's your marketing content over here. You go through that marketing content, you decide to be a customer, you're going to spend dollars. We now open up another area to you, which we called our portal, or, you name it. And then you log in here while you're a customer. And then when you decide to sell the product or no longer be a customer or whatever, we lock that door and we send you back over here, right? Those days have to be gone. We need to create graduated experiences in which, we still maintain a digital relationship with people, whether or not they have dollars with us today or not, or whether or not they have dollars in this one business and not that other business. And that is the defining challenge for the enterprise, I think, for the next decade.
I want to touch on something you just brought up, and then I'm curious the role of content, because fundamentally you're a product and services business, but not necessarily in the content business. Although there might be, you might have talent that writes white papers or speak, or how do you think of so in terms of that value exchange in the hopes of getting first party data? How do you think about sort of procuring or developing content to begin that exchange? Or
I mean, Matt, I'd venture to say that we're all in the content business, whether we like it or not. And I would also say we're all in the technology and software business, whether we like it or not. Right.
Yep.
Ultimately, your business is going to be defined. The future of your business is how well you do those two things. How well do you manage your content, and how well do you manage your technology? Right. We luckily have made a commitment many years ago to build a strong stable of writing talent. We have a very large editorial group within the organization. And, something that the head of editorial at our place always says is, there's writing done in every organization. The question is whether writers are doing it, right? And so, we made an early commitment to that. And so part of that, really, education is a huge part of what we do, okay? And then there's a reason for that. One is what I described before, which is helping the advisor have the information to make the right decision for the end investor, but also information that they can share with that end investor so that they're all speaking the same language, right? Which is not an easy task when you're dealing with these complex things. The other thing is that a majority of decisions about people's finances or about, what they're going to invest in, et cetera, those decisions are made before they get to your platform. So before they pick up their app or before they log into the 401k or et cetera. So what you're bound to have happen is people out there searching for, what should I do with my 401k when I switch employers, right?
Yep.
Now, they're going to ask their uncle because he, has switched jobs a bunch of times, and they're going to ask Uncle Google because Uncle Google has a bunch of answers for that. And they're going to do all their research, and then they're going to go and they're going to log into your portal, and they're going to go to move that money. And at that point, you're on the defensive if you're the provider of that service, right? You think that there's probably some information that they would benefit from in order to help them make the better decision, but chances are the decision has been made before they got there. So,
quick question before you go on. And
Mhm.
if the outcome or return isn't what they expected, is they don't blame Uncle Bob or Uncle Google, they blame the provider.
That's exactly right. Or you just never get they never understand why, and you've lost the opportunity. But either one is equally as tragic, right?
Right.
And so rather than being on, the defensive, it's really about trying to understand. Again, when you talk about first party data, when you talk about those sorts of things, first of all, is you have to be out there in the conversation. So when people are doing Google searches, or, when they first get exposed to their plan, we're talking about retirement now, so I'll stick with that. They're, learning about their 401k and what is offered. You got to start that education process there so that they know the questions to ask, so that they know the things to look for. And then also, looking for opportunities to get that information in front of them at the right time. There are probably very key indicators that somebody is getting ready to make a specific decision about a specific product or service based on what they're looking for, what they're reading, their activity, et cetera. If you can identify that, you can be a great help to them by surfacing that information at the proper time, right? So a lot of folks, when we think about marketing based on data, people think about Big Brother or, this oppressive thing where somebody's trying to, do something to you. I don't look at it that way at all in the way that we approach it in our organization, and the way that I think that all good marketers do approach it. I think the idea is that I have something that I think is valuable to you, but it's probably not valuable to you right this minute. And it's probably not going to be valuable to you, at this X time in the future. There's a period in which this is valuable. And I want to make sure that I get you that information at that time and on the platform that it makes the most sense for your liking. Are you somebody who goes to YouTube to learn about things? Or are you somebody who prefers to read dense white papers? Or are you somebody who prefers to chat with someone or talk to someone on the phone, et cetera? So, excuse me, understanding that about your prospect or your client, and then understanding the propensity, right, to either, purchase or inquire or whatever, when that is, and providing the right information is just as vital as having a great product or a great service.
So let's pivot the conversation directly to data now. And obviously, another place where our world is evolving is in terms of data and privacy. Talk a little bit about sort of how you're navigating, the landscape, especially from a global perspective, because while there are similarities, I think a lot of the new restrictions differ from location to location.
Yeah, it's very true. And even within the United States, you see some varying sort of degrees. California has their own Consumer Protection Act versus, New York has long had, different restrictions than other parts of the country as well. And then, yes, it gets more and more complex when you move beyond legal entities, you move beyond borders, et cetera. There's no silver bullet, right? I think, ultimately what my approach has been and it always has been is do no harm, do no evil, right? So, we're trying to make sure that as we move forward with initiatives, if there's a part of the world or a part of the country or something where it's ill-defined or we can't really figure out how to best serve it, it's best not to go there in that area. And for us to, provide those types of things in areas in which it's commonplace and people are used to it and accept it, right? Because I think, in the US, we've benefited, as opposed to say Europe, right? In the US, we've benefited from very loose legal ramifications and laws, et cetera, around data privacy, et cetera. Primarily, that was about not within a company, right? It was about companies who were taking data and instead of using it for the good of their customers and their good with their customers, packaging that up and selling it all around to other places that was unknown to that customer, right? So that is not the business that I've ever been in. Not to, I'm not saying it's not good business. All good business is good business until it's not, right? And so, but now that's not good business. Consumers have spoken; they don't like that, and that's where I see the largest challenge coming forward is the third party data components getting shut down more and more for folks, right? So you need to own the relationship, and that's back to the first party data, right? There needs to be a relationship with the prospect, with the customer, where they thoughtfully trade value for value with you. They like your content, they like your tools, they like your products. As a result, you capture data. You capture that data and you use it to make better products and services for them, and a better user experience for them, and only that, then I think you create a circle of goodness with your customer and prospect, and you keep yourself out of trouble.
So does that mean for when you're trying to mine prospects, you're really using contextual or context as a mechanism to find new people, to even introduce that first introduction where you say to someone who would benefit from this content, let's start to create that conversation where it can potentially move someone down the funnel? Does that mean like that's the approach? It's really contextual?
That's what we try to do. And we also try to, the app model of freemium, we try to use that as much as possible as well, where, if you're searching Google and you're like, I'm looking for a tool that's going to help me, model my 401k savings, right? Or my investment portfolio, and you click the return, and the first thing you get hit with is register now, or, how many of our products are you going to put in there before you start using, you're not going to get anywhere, right? The idea is to put real tools that provide real benefit in people's hands. And then for advanced features and functions that actually require a relationship, that's when you ask. So meaning you've done a lot of work now in this tool to put in some information and whatever else to get your result. You probably want to save that and revisit it, right, over time. If you'd like to save it, the only way we can save it is if we form a relationship together in which I store that information for you and you can come back and get it. Oh, and by the way, if you'd like, I can inform you when changes happen in the market, et cetera, that influence the thing that you were looking at. So that's a benefit and a service that we're putting out there. And, there's no money has changed hands, right? At that point, well, what's happened is, we've tried to be an educator and to spread, good information for folks and tools for folks to use. And folks have enjoyed that, and then created the quote unquote account. I don't like using that word because people think about it with dollars and cents, but they've created the digital relationship with us that is identifiable.
Got it. We're winding down and almost at Q&A, but I think you mentioned when we started, sorry, I lost my train of thought.
No worries.
I don't know, when we started the conversation, you know what? It wasn't something we had prepared, and yeah, you said something at the beginning. I can't find it.
Okay. I think one of the things that we had talked about previously was around automation and what we and how we use that, right? And what is the right mechanism for that, which, I think is another interesting topic that we could spend another 40 minutes on.
Another
right?
session on. Yeah, absolutely. And that whole mix between, you started with talking about robo apps and robo investing. So I actually think, we cover that reasonably well for the time we have allotted. So at this point, if I recall what I was going to ask, I'll bring it up. But in the meantime, I'll turn it over to Q&A.
Sure. It's great.
So the first question is, how does basically ESG or purpose-based investing play a role in your digital marketing efforts?
In our digital marketing specifically, I mean, it's in our company, right? It's in our DNA. It's been in our DNA for quite a long time. But in terms of from a marketing standpoint, really what we're trying to do is make sure that our ESG message is out there and that people understand our commitment to ESG, the products that we have. So there's kind of two sides to it, right? Because our business, has ESG baked into it. And it's important and people who are investing in our company beyond our investment products to understand, that we stand by these values. And then also the products that we create, they're on various spectrum of ESG, and understanding, making sure that folks can understand, what is it that they're investing in? What is under the covers of this investment? What is this, the ESG, should I say, flavor of this particular, offering that you have? So we spend quite a bit of time and effort on that, both to end consumers, so end consumers can understand that, but then also to sort of the analysts and the institutional investment audience, so they can fully understand sort of what our approach is.
And building on that, what's the, in terms of seeing the products, I mean, I guess if you're to a degree, there's a trade-off in terms of outcome versus return, but what's the, relationship or correlation between consumer reaction and performance and investor performance? I mean, we did have that conversation about sort of that meme stock where there's purpose behind, GameStop, the rise of GameStop. The purpose is really completely divorced from anything to a GameStop performance. Whereas you would think with something like Tesla or some EV product, there's greater relationship.
Yeah, that's a great point. And I think that the idea that ESG investing is somehow does not perform as well as non-ESG investing, I think has been debunked a while ago. I think you can do you do good sound investing in ESG in companies that have good ESG track records and good ESG practices, and those that aren't. I don't think that there's necessarily a trade-off there necessarily. It's more around, I think, as you said, like what specifically is it that you want to champion, and what is it specifically that I don't want to get over my skis because I'm not an investment professional, but when you start thinking about non-ESG, if you will, I'll use as a term, there's actually a lot of risk baked into that, right? So as you've seen, when public sentiment or folks decide that they no longer want to spend money in an area of the economy that has to do with, let's say, fossil fuels, right? That has an impact on the companies that you're investing in. So, or when there's something that happens in the news about a company who's not having fair labor practices or things like that, those are all things that ESG investing looks at. So there is an element where ESG investing actually de-risks your portfolio in a way that, maybe goes under the radar for those who aren't that familiar with it.
No, it makes a lot of sense. We have another question. Do you see a role for brands in financial services or insurance on platforms like TikTok or other emerging social apps?
I never say never. So the thing with the social platforms that I've always said is, look at it as sort of a pickup basketball game. Right? There's a pickup basketball game. Everyone's there playing basketball because they like basketball. They're there to do basketball. If you just show up there with you don't know how to play basketball, you don't want to play basketball, and you just start advertising your product, you're not really going to do very well, right? But if you can find a community that's out there that actually cares about the thing that you're talking about, and you care about the thing that's talking about, and you can join the conversation, then that's great for organic use of social media. All other use, in my mind, is about advertising. So it's the same thing that, I may advertise on Jeopardy, even though I have nothing to do with trivia or Jeopardy or anything like that. I just know that people will want to understand my product, and they will look at that that particular channel. So I guess the long story short is we may start by advertising in that area just because it's popular and people are on there. But if we were going to participate in a social network, it would have to be because we really had something to contribute to the social community.
I see. So just want to make that distinction clear. You may advertise just like you would on television or in any other medium.
Mm-hmm.
But if you were going to participate outside of that, there'd have to be sort of an organic or natural way in that drove that activity.
They're right. There would have to be some synergy there. We'd have to have a reason to be there, not just to break up the party.
Right.